So, Marcin, I must say you're doing an excellent job with your gardening.
Thank you.
It looks fantastic. How many hours a day do you spend back there?
About 0.25.
So what's up with your what's up with your Phillies and your Eagles?
Yeah, well, the Phillies are playing well despite losing, Trey Turner and Zach Wheeler, our best two players, and from
Yeah.
pitching and batting. But the bottom of the order is really killing it, and that's great. You don't expect lots of production out of your 7, 8, 9. But these guys are killing it.
Yeah.
And the Eagles,
Well,
the offense looks like crap, but we have a new offensive coordinator. He doesn't know you're allowed to move your players before the snap.
he hasn't learned that?
I
Well,
don't
maybe
think he
somebody
knows
should
about.
tell him.
He hasn't discovered motion or play action yet.
Yeah,
He's a
well,
rookie OC. He's never
he
been an
should watch the
OC.
49ers.
He's never designed plays. And I think my fucking Yorkie can design better plays than he's designed.
Oh my god. All right, so
Oh.
he's still figuring it out. All right, let us give this a minute to retweet to people and let everybody know we're alive. Sorry for the delay, everybody. Yours truly was having some technical problems.
We were just talking about Robert's gardening skills.
We were talking about Robert's garden looks fabulous as always. When are you headed? When are you headed back north, Mr. Marcin?
I live in the north. This is my primary residence.
That is
This
your.
is-
That is that. I thought that was your garden in.
This is not my Florida place. No.
Oh, okay. All right.
This is why I
No,
don't go to the beaches. I invite all the girls to the big jacuzzi parties here.
Oh goodness. This is a family show.
Oh goodness.
Oh goodness. Let's not go there. Let's just say Robert Marcin's parties are infamous. We'll leave it at that. We'll leave it at that.
Yeah, they're
right,
nice. They're fancy garden parties.
They're garden parties.
Where we drink like that.
They're garden parties, yes. Tea parties.
With the pinky out?
The
Yeah.
pinky- Is that how you do it? That's apropos. I think Trump is in the UK this week. Or today, tomorrow. Last night. All right, let's get this party started. Welcome to Wall Street Beats, everybody. I'm Steve Lamar. I am joined by our small cap and value pro, Robert Marcin, and our macro pro and awesome trader, I must say, Ben Brey. Today, what are we talking about, boys? I'm looking at NVIDIA, China telling NVIDIA to tell their customers to cancel orders. I'm looking at Fed Day and everybody focused on the dot plot, and the chatter is to sell the news as soon as the Fed announces their 25 basis point cut. I think Ben's got some views on that. What else did I have on my list? China exports down for a fourth month in a row. That's not good. Why is Waymo doing a deal with Lyft in Nashville? That's odd. I don't know if you guys have some views on that. And what else? We got Cracker Barrel, as we discussed yesterday with Jeff. We got Cracker Barrel today after the close. I think you made it pretty clear that's a no touch. Let them figure things out for a quarter or two before you go near that stock. And we had StubHub IPO today. So anyway, let's get this started. Ben, what are what's on your thoughts? I know you're going to talk some China tech has been ripping. Awesome call by you. What are we doing with that now? Is it time to take a little off?
I think it's time. I think it's time to take a little off. We bought, I talked about in July, we started buying the Baba again, and then the Baidu a little bit later. But we look up and Baba's up 55% since July, and Baidu's up 40%, and the K-Web's up, I don't know, 33% or some 35%. So yeah, we're taking some Chinese stocks off. It's been a good move. You sometimes get these moves, and then there's people moving money in there who, look, part of my thesis was that the China was cheap for a long time, as I've talked about, and that if the world was going to be in a bull market, that China would be one of the last. Energy in China would be the last two, and healthcare were the last two places to put some money. Well, clearly people have started to put some money in China. I think they realize, oh wait, these guys actually have AI and tech, and they know what they're doing, and and so I think that it's re-rating pretty quickly. We're involved in the Byte Dance, trying to get stock there before that goes public. I know Trump's talking about selling it to some consortium of Larry Ellison and Silver Lake and a couple guys, the U.S. part, but that's only 20% of the business. But yeah, I think it's time to take some off. The last time we talked, you had said, hey, are you going to take some off? And I was like, I think it's got a little more legs. It might still have more legs, but this is a pretty fast move. And so I'd like to see it consolidate for a bit, maybe retrace a little bit, and then, another leg up. But yeah, I think,
But the names you like generally were the Babas and the Baidus and the. Do you trade the tech ETF for like the K Webs or do you get involved in those?
I mean,
look, like specific.
Look. I think that if you're like most of the people listening here are probably Americans, maybe Europeans. Do you want to get yourself involved in single stocks there? I think the answer for a lot of people is no. There's some who will. So the K-Web's kind of the easy, like way to play Chinese tech. And again, like I said, I think we bought it. It was 33 in July, and now it's 41, 42. That's a big move for an ETF.
Yeah, in 3 months.
You one of the things you can do also is you can sell some calls, right? If you don't want to sell your position, you could probably sell some calls here. And worst case, you're getting taken out a little bit higher. Because for tax ramifications, I understand that not everybody always wants to get in and out, but I just think that given the velocity of the move, that it's prudent to take some off here. It doesn't mean that they can't keep working. I mean, Baidu. When we bought Baidu, it was like one and a half times EBITDA or something like that. Even maybe cheap enough for Robert. I don't know. You get that strict.
Does 1.5 times count, Robert?
and it was actually made to look worse because they were adding AI, which was lowering their monetization. And it's also Baidu was kind of like everybody. If you just talk to a random guy who's a money manager, they're kind of like, Baidu, they're the worst, blah blah blah. So I think that that's had a catch up. I think Baba has been like the go-to for Western managers. So yeah, there's that. So again, taking some off in China right now. If you don't want to sell, you could sell calls against all three of those that we just mentioned.
Hey, Marcin, have you been in this China trade at all? Have you been any of your positions in over there?
This is terrible. Instead of Baidu, my position on Chinese stocks is buy don't. I don't buy.
I don't. All right. So you did.
I literally will
not buy.
I do not like the culture of the people, the political class, not the ordinary people, and the financial system over there. So that's on my do not do.
That's just on your no-touch list. Got it.
No
just generally won't go there.
Not out. Not no. Ignore it.
Okay.
I mean, no. I think that that's a fair point, right? The government, unlike our government, isn't like supporting the stock market. They don't care about the stock market that much. But I think they're changing their attitudes a little bit, where they see somebody like they're like Chinese Americans, or a guy like Jensen comes here, gets taken care of quite well, versus the government's not supporting their savings vehicles. I think there's an attitude change. I know that there's a component of the CCP that is trying to go back towards a more capitalism push, and that's one of the things that was part of my thesis also, that maybe Xi Jinping gets demoted, if you will, this October plenary. But again, that gets priced in right about now, right? So it doesn't surprise me that leading into that, we would have a Chinese rally, and then you have some event risk from then on. I know, I don't really have a strong view on what you started with, which is the Nvidia thing, on the importance of that. But I know Nvidia stock's starting to trade heavy. If people notice that, which it's an interesting dynamic. The S&P doesn't seem to care at all, but it is like a little heavy, and they. I mean, I'm not going to get too much into it now because it's deeper. But when you start looking at the round tripping stuff that they're doing, and they're starting to not disclose some of their cloud credit and some of these things that are in the footnotes, and you see that they're renting out 1.5 billion of chips from Lambda, who they actually sold them from. There's just a lot of ancestral round tripping things that were the kind of stuff that happened during the .com 25 years ago. And by the way, Nvidia got SEC fines for some of this stuff. So they're literally already did this. Like, there's a historical precedent for it.
Yeah,
but
it
other
just
people
doesn't pass
too.
the smell test.
No, and without going too deep into it, I've been starting to do some more serious work in that space and looking at the accounting assumptions of Meta and some of the hyperscalers, how they're expanding their useful life. And there's just a lot of red flags. And the problem is, I thought about shorting Oracle like 2 weeks ago or 3 weeks ago, and was, like, hey, we'll just wait. And then the thing goes up 40%. So, and then CoreWeave rips. And so it's just, I think you have a difficult situation where you can have a view that will probably be right, but can you run the position, right? And I think that's the problem.
Can you afford the pain? Yep.
Yeah, and like, look, Oracle going up 40% was real. And Oracle going up 40%
That's a big company.
on a startup guaranteeing 300 billion of the revenue that has 12 billion of revenue today and is burning 7 billion of free cash. Like, how can that be counted as GAAP deferred revenue? Like, what are we even doing here? Right. And then we're going to add 40% market cap to the company. So, I think Robert and I talked offline a bit about this, and we're both very skeptical. But again, having a view and expressing the view in the market, I think it's just easier to wait and shoot them in the back, right? Like, once we see some CapEx plans stall out or even decrease, then you can just start shooting them in the back with an Uzi. You know what I mean? Like, and it'll be easy. Right now,
got to see the turn first. We haven't even come close to seeing these things roll over yet. And I saw a note from Chanos. I think it was this morning, about the AI hyperscalers and the infrastructure guys are investing between $4 and $6 a share for every dollar revenue. So I mean, the amount of investment that's going into these things is just insane. And my God, you're going to be waiting years to see a return on that if those numbers are anywhere near close.
Yeah, and I'm also a little skeptical about, what are these chips that they're buying? Like, what is the useful life on them? When I think about, okay, let's go back to 22, right? The H100 comes out, and that kicks off this whole AI LLM boom. Well, we've already had the H200, and now they're selling the Blackwell. So what is that value? Like, how much value is left in one of those H100s? And they still have value. I mean, I would love to have one, to be honest. Like, I would gladly put it in my office one and just zoom around. So there is value, but at the same time, I think that it's dramatically
make your Bloomberg spreadsheets actually work fast.
That's such a good.
Marcin, do you still own this thing? Do you still own Nvidia? I remember you putting a hate buy.
I still jinx own it, but I keep making money.
At least you're making money on your jinx buy.
Yeah, that's been good. But basically, I think keep an eye on Nvidia here as it's approaching 170. I see, and I think the narrative. It's not going to take a lot for the narrative to shift. I think that the bulls and the euphoria have been in control, but like sound mind guys that I talk to, professionals, like they see it. I mean, Jim's kind of leading the fellow Wisconsinite, Jim Chanos. And look, he's a short seller, but he's pretty good. he's pretty good at this. He's a guy who got Enron right. You know, I saw a chart yesterday that showed capex as a percentage of EBITDA is back to where Exxon was during the shale boom, the peak of the shale boom, and AT&T was at the peak of the telecom. So these guys are there, and you know, there's going to be a point here where people realize that the LLMs are really just search 3.0, in my opinion, at this point, like, or Microsoft
Yep.
Word.
Yep.
I mean, Microsoft Office 2.0, 3.0, like they're good products, but like does that require this level of
And does the
investment?
revenue model really scale with a $20 a month subscription?
Right. They haven't
I
proven
don't think
the
so.
yet. Yeah.
What's that,
They haven't-
Marcin?
Yeah,
I mean, other than companies using it for efficiency, they haven't proven a a viable revenue, large revenue TAM for this yet. So it's we're
Yeah.
going to see how they're. I mean, obviously it's helpful. There's abilities to streamline and take work away from people and give them to computers because it's more competent than any other agent or program in the past, if you will, coding and doing stuff like that. But as far as generating trillions of dollars in incremental revenue, there's nothing out there that's even close to contending that's going to happen. And yet these stocks seem to be discounting something like that happening. So.
And these subscription prices generally go down, not up over time.
Yep.
I mean,
And
even
all
if
it takes is one. All it takes is one guy to go no subscription and advertising and pay for clicks and just create a Facebook or Google model out of it. There you go. There's no revenue from it.
Right.
We don't subscribe to Google or Facebook, do we?
Nope.
There's a good, well, we do a little bit for the cloud costs. You probably pay like a couple bucks, like here and there, like there is some cloud like hidden service charges that they do, but but I was just gonna say that, Robert, is that there was a short report on CoreWeave that went around a little bit ago, maybe a month ago or something, and one of the things in there that they had documented was that OpenAI had taken away the head of ads for Meta, who obviously was very good at her job, right?
Right.
Like, very good.
Yep.
Those guys know how to sell ads, and
right.
and so it's a clear like indication that they're going to move more towards an ad model, which is what if my thesis that it's really just better search, right? Perplexity,
right.
That they're gonna have to go to ads because they're not gonna have the revenue otherwise, right? But then if you go that route, then people start to realize, wait, maybe this is just search, and then and so we'll see how it plays out. But like, yeah, I am a Barenheimer nation waiting to come out and just tear these stocks up. I can't wait.
Amen, brother. I'm with you. Just waiting for a little crack.
I think this Oracle RPO announcement, the $300 billion order. I don't know. Do we know for sure it's $60 billion a year for 5 years, or could it be longer? It could be less and longer. I don't know if anybody's fully disclosed the terms of that contract. But why Microsoft didn't take this business when they have a relationship is an important question, and I think they need to borrow about $300 billion to pay for it. So,
yeah, that's all.
They don't have any right now. They don't have any ability to pay.
Sounds dilutive to me.
They can't pay next year, let alone for the next 5 years. So I don't understand why it just wasn't given a big raspberry by investors. They just want to believe this. This announcement's going to signify the top of this bubble, in my opinion.
I concur with that.
Right here, stating that.
Yeah, and think about it. Like if you look at the Meta deal the Meta deal they just signed for the $29 billion data center, they did it via a variable interest, a VIE, which is what Enron used, and they're underwriting it. Okay, so they keep it off balance sheet, but the Blue Owl and PIMCO were the sponsors. Well, they'll do the debt, but like they needed not Microsoft, Meta to underwrite it and say, hey, if the value of the data center goes down or you terminate the lease, then you're on the hook for that debt, basically. So there's hidden liabilities going on. There's funding structures that are not kosher, and then And then, Robert's favorite guy. What's that guy you always send me, Robert, who talks
Ed,
about all this?
Ed Zitron. Where's your
Ed
Ed at?
Zitron.
Zitron
Yeah,
is
very
he's
funny
on
guy.
Twitter.
Yeah, and like he just talks about, and other people do as well, is like 95% of these companies are not making any money, right? And the only one that really was Anthropic, but then OpenAI just jammed down their ad prices, so then they're trying to compete with them too. And so yeah, we're just sitting in a situation where a lot of VC funding, a lot of like tourist funding is funding this, and when the funding dries up, that's when it all will change, basically.
Yeah, and we're seeing a lot. I mean, a lot of off-balance sheet financing by some of the biggest companies in the world. Like, why
Right.
Nvidia? Why Oracle? Why Facebook? Like, why are these guys doing all this off-balance sheet shit?
Right. That's a major red flag, in my opinion.
Yeah, exactly. All right, let's move on. Mr. Marcin, what were you? What did you have for us today? You got a new idea for us, or are you gonna give us an update on?
It's a follow through on my initiation last week or 2 weeks ago.
Okay.
Because I did a starter position in a company called Tetra Technologies, ticker symbol TTI, and I started buying it in the mid fours, and it's kind of pushed its way near five. So I stopped buying recently, but it did get to small normal for a speculative company. And if you look at it, if you look at its history, it's very underwhelming. It's a specialty oil service company, and it's the same size in revenues it was 10 years ago. There's nothing compelling about it. The track record, to say it's mediocre is overstating the company's track record, okay? But they've been slowly remaking the company, and there's a couple of growth opportunities and new businesses that, because of their IP, they have patented products and services that, could, generate a very significant growth cycle in the next 3 or 4 years. So I'm talking about 20% a year compounded revenue growth from a company that had 0% compound revenue growth for the last 10 years, and earnings power that's significantly higher than anybody in the street realizes. A little bit like my, Silicon Motion story these days, which has a big product cycle driving the growth. And if you look at the
a starter position, you've done some more work on it and you're adding to it. Is that?
I've been adding to it, but up here I kind of paused just because it's at the very high end of the range, and I want to leave a little room to buy down. So it's gone from a 1% to a 2%, and if I like this, it'll get to 4 to 5. So that's about where I am. But where it is today, I kind of just pulled back on it and see if it'll settle down a little bit. But the story is, they have some excellent chemistry in bromine and calcium chloride and filtration. They started out as a company that delivered water to fracking, and then they had to put in systems. They call it the flowback from the water. So they had to put in filtration systems to clean that up, right? And right now, they had their own IP, and then they licensed some desalination IP, and they patented a process that takes produced water from the oil fields and cleans it up well enough to discharge it into the regular rivers, the regular water table. And in the Permian Basin, the water is so toxic you can't do that. And they produce 7 million barrels of water a day, and 7 million barrels of oil, 35 million barrels of water a day. And these guys have the first small commercial plant up and running with EOG, and they have 7 NDAs total. And if you just want to speculate, right? If they said they're going to charge $1 to $2 a day to clean this water up so it can be discharged into the environment. It's a massive problem in Texas. There's all kinds. It's being minimized by the oil companies, but there's a lot of problems with producing.
So, Robert, are the oil companies bringing them the water?
The oil companies, when you produce a barrel of oil, you get 5 barrels of water with it. You can't do anything about that. It just shows up. The oil's floating on the water.
So
And
they
the
have a
water,
facility where the oil from the rigs, they bring the water to their facility and they treat the water with whatever their process
yes.
is, and then
They have
what do they have a well?
multi-stage.
They put the water back down. They put
No,
the water back down whole.
that's
Or
what they've been doing. That's what they've been doing for the last 20 years, and that's causing major problems. So now they just want to treat it so they could use it to cool data centers, irrigate crops, not
So then they
crops.
sell it. So then they sell the water for people to use for other purposes.
You can sell it. And if you can't find a buyer because it's too much, you just discharge it into rivers because it's clean enough to discharge into the water treatment, right? So right now they pay to dispose of it, but the oil companies are going to have to treat it better and not just dispose of the toxic water in saltwater wells, which is what they've been doing now, right? So you say if these guys get even $1 a barrel and they're getting 1 million barrels, right, a day, that's $365 million. The company's only a $600 million company today. So
I think the oil companies would pay $1 a barrel all day to get rid of this dirty water.
Exactly. They said 1 to 2. I'm just $1 a barrel. I'm just using 1, right? I mean,
they pay more than that.
And the governments are involved now. The state is the Texas Railroad Commission and the Texas legislator are going after the producers. It's a major problem in the Permian. Not anywhere else, just in the Permian. That's where.
And is it salt water or fresh water? Or does it matter?
It comes out salt water, and then they desalinate it. So it could, it's cleaner than drinking water when they finish treating it, they say. So so that's just a massive opportunity. They've not quantified.
And right now they're focused in Texas. There are obviously lots of other opportunities, including up in the north.
Really the problem, because of the density of the oil production, right? It's like when you frack a field, it's like manufacturing oil. It looks like a field that has rows of corn in it, and it's structured like like an oil field, but
they move from hole to hole to hole,
exactly.
Keep on down the road.
So it's assembly line oil production, and that density causes the problems. It produces so much toxic water that you have to spend a lot of money to dispose of it, and they've used up all the disposal capacity, is what the industry's saying, and they got to find another way to treat this. So if you think about the TAM, right now they pay to dispose it. So it's not like the money is going to be incremental. If they could just not transport it to a well and dispose of it, they're going to pay to treat it, and they're going to dispose it in the river because it's going to be clean enough to put in the river, right? So that's their plan. And that's such a large opportunity that the call option on this is worth something. And the stock is very cheap. But wait, there's more. There's
I want to talk to you about this offline because I've got a business up in North Dakota that I might be able to use this technology. So I want to learn more about it.
Because they have a chemistry for drilling completion fluids in bromine, they actually created an electrolyte for EOS, which has a zinc bromide battery, and it's it's a liquid battery. It's a big tub. It's a 8 to 12 discharge cycle, and if you follow EOSE, it's going from $1 to $8. They say they have this massive backlog of revenue, like 500, 600 million for next year, and they did 15 million last quarter, so they're going to do a $200 million. They should do over 50 million in December. I don't know where it's 50, 60, 70. It's a big number. And it's a $200 million run rate. In 2 years, they say they already have firm orders for these things. It's stationary batteries. It's a lot cheaper than the conventional lithium ion, right? And it's non-flammable because it has bromine in it, which is a flame retardant. So, and it's just big,
So you own, what does EOS have to do with TTI?
They sell them 100% of the electrolyte, the zinc bromine electrolyte,
Got it. Got it.
and
So do
they
you
get
own
about.
EOS as well? Do you
I
own
do not.
EOS?
I do not. I do
No.
not.
Okay.
I have my battery position in Electrovaya. Okay, but if
Got it.
EOS succeeds, 15% of EOS's revenue top line goes to pay for the electrolyte to these guys. So if they do $1 billion in 2 years, which is what their forecast is, they'll get 150 million of very high margin, monopolistic margin revenue. So again,
Yep.
you could put a scenario where this $600 million company in 3 years is doing $1 billion, and you know what the estimate is for sales growth?
What?
3% a year in the
Sorry, I had to
street.
say goodbye to a 4-footer.
3% a year. So, and
All right.
they could do 25. They could do 20% a year if this all comes together. So there's investments that need to be made. There's still structures that need to be figured out for who's going to own the assets that are going to treat the water. The oil companies want our guys to own them, but the government want the oil producers. They want Exxon and EOG and Chevron to own the assets, and our guys would license it and run the facilities. That's how so that's capital light for these guys. So there's still uncertainty as to how this will play out. But the opportunities are for two new businesses that could totally transform the company over 3 to 4 years.
Okay. All right. Well, I'm going to reach out to you offline on this. Let's move over to the topic of the day, Fed Day. Ben, what do you and you too, Robert? What do you guys? Any thoughts on? I guess the chatter is going to be about the dot plot, and what the expectation is going to be. I think 25 bips is baked in. What's going to happen? What's the dot plot going to look like for the rest of the year here in 25, and then going out to 26? I think they're pricing in 6 cuts, 4 to 6 more cuts. So I don't know, Ben. What do you think?
Yeah, I think it's 275 by next Christmas. So the Z6s are next January, because it's the forward 3 months now with the SOFR instead of Eurodollar. Yeah, there's 6 cuts, and so I have been a pretty loud bond bull most of the year.
You have,
and
you're finally right. Every once in a while we get.
So we're the
Bears and the bond bulls are right.
I don't get how you can be a bond bull and a gold bull and the basement trade bull, but bonds are at record prices, or not record, but 3 year.
No, not record, not record.
Not 3 year high. 3 year high.
3 year high. That's right. But
you're gonna have it all. No inflation, but the basement inflation. So.
Look, part of it.
Strategy, in my opinion, but it works so far. The bond market goes up and gold goes up every day.
Well,
the dollar's getting crushed.
The dollar. That's what I was going to say. I think the dollar is the key here. So what you want to watch. So if we rewind a year ago, I think I was talking on the exact same Fed day on the show, and I was saying, hey, the long end is a sell here. Right. And it was a big sell, right? The rates had come down a lot and the long end was way too low then. And this time, I think the long end's 40 basis points. Like when I say long end, let's just talk about the 10. The 30 year is not even worth talking about. It's about 402. And you saw the mortgage rates. More importantly, mortgage rates are collapsing, right? You have the 30-year fix now at 613. It was down 12 basis point yesterday. The 7.6 floater is around 555. So, as people who've been on the show know, or whatever, it's Steve as well. We own the Rocket. Yeah, and I also own the UWMC on this thesis. But as those mortgage spreads come down because rate volatility is imploded, plus base rates have come down, well, then guys got to replace their principal. And so there's this mortgage bid on bonds. And so the key to here to watch is what happens with the spread. Do we get a flattening or do we get a steepening here? That's the tell. If the curve doesn't steepen, then it's over. Like this cycle's over, and it's just like basically Jay Powell's job is to try and not let the curve dip too fast, right? Because it's bad for the banks. So can he navigate, to use the right word, 25 basis points, 25 basis points, 25 basis points, and not get sucked into having to do 50s or 75s, and then
Right.
and then because remember, it's like the short end leads, and the short end. Let's just remember, I even got our boy Steve trading SOFRs this year in the beginning of the year, and that was a great move. But they front ran it, and they never really gave back anything all year, did they? Right?
No, not on the Z6.
The 2 years and 3 years went to 375 fast and did not give it back, right? Whereas my credit short gave it all back. We're now at 30-year tights on spreads again, and the long end kind of floated around, but the short end has not moved at all. And
so when you
and
say
so
it's
the question,
over, what do you mean it's over? The gold run is over. The
no, the
risk on
rate cycle,
run is over. The rates run is what's over?
the rate cycle's over. Basically, like we'll just get into this game of like, okay, you want to be a tough guy. Okay, well, so if he comes out like hawkish, watch what happens at the back end of the curve. It's just going to get bid, and then the dollar's going to go up, and then that will be bad for risk essentially. Now, if he
100%.
goes dovish, the short end gets there. So then you get a little steepening, but it's led by it's a bull steepener, not a it's not like it's basically the long end selling off the way it was last year. And so
Right.
that's the key is look what happens with the spread of the curve. And then if he tries to be tough guy, that dollars, because let's just think about the first day of September this year. We came back in after Labor Day and we had a real risk off morning where vol was up, gold was up, and that was about it. And bonds were up, and then risk was down. And then it got bid, and the dollar, you just use the DXY because everybody thinks about that, but that's not actually inaccurate, in my opinion. That's just mostly euro and yen. The DXY has gone from 98.60 to 96.70 or something, right? And so I think the thing to watch right now is the dollar. I think the rates have front run a decent amount here. I think it's going to be hard for him to get incrementally dovish relative to the market, especially given like, there's a serious subprime issue, but I don't think the general economy is falling off a cliff. Like I think there's weakness, but it's not there yet where you could just be like, oh, I got to be so dovish. And so then I just think like the dollar,
not with the
is
market at
lever
all-time
that gets
highs
pulled.
and retail sales holding in, and I mean, come on, give me a break. You don't.
Right. And I think one of the things to think about this year is if you did like a list of all the major markets, like there's one on my screens on Bloomberg has this, but then you adjust, right? So think about it, the dollar's down 12% on the year, right? What's the S&P up? 12% roughly. So in
Yep.
in a currency adjusted world, you have a much weaker market than we did, even though most people see nominal, and especially Americans who just spend dollars, they don't think in these terms. But versus the market we had in 2024 where you had strong dollar and strong stocks, and that's a dynamic change that's happened. And so I think now there's a vulnerability of, if the dollar strengthens, that will be bad for stocks basically. And for it's just a game at this point of like how fast are they going to do it, what's going to lead, the short end or the long end. But my opinion is the rates keep coming down, but we could have look, the IWM's at 240 something this morning, Robert. And I think that there's a real case to be made that as they refi homes or people can like get HELOCs and stuff, that it is a source of cash.
Yep.
To the middle companies, middle households. So there is a weird dynamic that could happen where we have lower rates without a massive recession, that there's nobody really talking about that for the most part. Like that is a possibility basically.
You guys do know that I've been more optimistic on risk on than a lot of people, not secularly, but sort of cyclically, because I follow the household survey, not the establishment employment survey, and I knew all the jobs data was a scam. all the jobs. And I've talked about this now for at least 6 months. The employment turned recessionary loss in the household sector 6 months ago. Okay. And I've been waiting for the rate cuts now for a couple of years and the recession, right? Some of us have been less, positive on the economy and unappreciative of what a 6% deficit spend as a share of GDP will do to hold up an economy, right? And then the AI boom is doing the heavy lifting there too with the infrastructure investment. But the economy, has been tapering for quite a bit, and I thought the Fed was behind the curve. And it's like Ben says, I agree 100%. It's how much and when, not will they? And
Right.
I sort of use that to keep my risk on very high beta, Russell 2000 stock positions. And in the tariff crashette, they got slaughtered, and now they're sort of getting back to where they were better than year end. And I would hope that the rate cuts will filter into the small cap markets, this time, to give us a little more than just a 2 or 3 month relative move in the Russell 2000. Hopefully it's at least two or 3 quarters, and in 3 quarters you can make a lot of money in Russell 2000 stocks.
Yeah, and final thing I'll say on that is I think it just plays into this idea of a rotation. I think there's people moving money into China. That's emblematic of people wanting to go to other markets. People moved money into Europe, which is just idiotic. I cannot believe where the European market trades at. It's just the dumbest. It's part of it is the euro, but it's That's like, great. I mean, look, SAP is the biggest company in Europe, and that thing's like just a rock. It just goes down every day. And
are you still short France and the French banks? And do you still have that position?
Yeah, I still have that on. It kind of got a quick start, and then it's just like chilling. But like, yeah, I'm short Europe through the Fez. I own a few longs over there, like that all these other shorts are against, but just very specific companies. And then yeah, I don't like Europe. I don't like the euro. But the point is that I think a rotation could happen, whether it's into small and mid cap stocks or whether it's into other countries. And that's what we saw after the TMT boom, as you both know, as you guys were both running money at that time. We saw small mid caps do really well, housing rate sensitive stuff do well. The dollar got absolutely trashed, and other markets did well. So, history never repeats, but it rhymes, and we could be in one of those kind of situations where this tech thing has been such an animal, and short and NASDAQ.
Time to take some off and put it somewhere else. Yeah.
Long a basket of Robert stocks and a few, we like with the Weight Watchers. That's another, small cap, name, like stuff like that. Maybe some Chinese stocks, some of that kind of stuff could be the way to go. But yeah, we'll see. Yeah.
All right. Let's wrap it up.
Guys, I traded my SOFR too, Steve, for a Restoration Hardware cloud SOFR. And it's too soft, by the way. It's not. Sorry. It's too soft. I sink in it, and my butt's like near my floor. It's too soft.
Oh dear. Talking about your pool parties in your bed. All right, let's wrap it up.
That's a good place to end.
Can't let it go. Thanks for joining us. Thank you, Mr. Marcin. Thank you, Ben Brey. And we will see everybody tomorrow. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats. Happy Fed Day. We'll see you tomorrow.
All right, guys.
Thanks, boys. That was fun.
All right, guys. Later.
Thanks, Jen.